In your chapter of this school book, you have got insurance as a reference here. Allow me to explain a few terms which you regularly hear with respect to insurance. Insurance, as we basically understand, means to give guarantee, as the insurance literally the word means, and it is where we have got different types of guarantees of financial nature which can be given. There can be one guarantee is given for the goods and services, and we call them as general insurance is the word that we've got. General insurance refers to insurance activities which takes place with respect to the goods and services. The basic philosophy on which they work upon, general insurance works upon, is the philosophy of making good the losses, compensating for the losses. And then if somebody has made a certain amount of loss, that person gets covered to that extent. Say, for example, if somebody has got a car insured and the car is insured for a particular amount, but then if the losses happen after 6 months or 7 months, then to that extent of loss, because the value of the car would have depreciated, because the person would have used for 7 months of the 12 months of insurance the person got. I suppose whatever is the losses the person of the market value is actually given. But then there's another insurance called as life insurance. But can you indemnify life? Can you compensate life? Certainly not. So life insurance works on a different principle. It's a kind of financial sort of protection is given, and it's a kind of contractual payment is made for different types of life insurance they've got. Depending on the kind of contract they may have entered into, the amount of payment will be made. So that is a some people call it as a contractual saving or contractual payment, whatever you call it, but then it doesn't work on the principle of indemnification. General insurance works on the principle of indemnification, while life insurance works on the principles of contractual payment that you have made a contract for. Because life cannot be I would imagine, ever compensated. And then here the depreciation is not counted, because life is not a depreciating thing. Life is appreciating. So a lot of time appreciation can be taken in the calculation of life insurance, while depreciation is counted in terms of goods and services and their insurance. Then we have health insurance, as the name itself explains, that insures the health of a person. Like somebody falls sick, the payment of the doctor and the hospitalization, God forbid, if at all the person goes into that, that gets done in this, and that's referred as health insurance. Then another term that you hear about it is term insurance. Term insurance is like if it's a kind of part of insurance where death benefit is given. If somebody dies for a specific period of time, within a specific period of time, then in that case the death benefit or whatever contract of payment that may have been made in that insurance policy, that will be given. That's called as term insurance. Then we have got another is whole life insurance. Whole life insurance, in which the death benefit is given, in the sense like the person dies anytime. There's no definite, whenever the person dies, a person to whom the other person may have nominated, the other person may be given the money, and that is what is called as whole life insurance. Then we have endowment insurance or endowment plan. Quite often they use the word. Endowment plan is one in which there's certain time that's payment is made up to a certain time, and that the benefit to the person is given after the death, and it is also having some saving component in the process. And that is what is you make some saving, deposit that money, and then a payment is made after the person has left the planet, and that's what when the payment will be given to the person that it may have been nominated for. Then we got micro insurance. This is insurance given to some such people who have got sort of low income, low premium, and then those people whose payment capacity is not high. So in that case, they will be charged on a very, very small amount, and then for those people having low income, they would be covered under this micro insurance packages. Then we have also ULIP, that is what they call as a unit linked insurance plan. It's one kind of insurance life insurance in which you have got some investment component is also there. The premium the person pays, part of goes into insurance and part of it goes into investment, and then the person gets the benefit of the investment happening in the market or the unit in which it is invested. There are other words which comes along with this insurance is third party insurance. But let's understand what is first party. First party is the person who's getting insurance. Let's say if I'm getting third party insurance for my car, I'm the first party, the insurance company is the second party, and then somebody who, God forbid, ever being affected, somebody's car gets scratched by my car, the other person's car is also insured, and that happens to be third party in that. So that is third party insurance that we have got. Also, one term that they use here is comprehensive insurance. Comprehensive insurance is one in which the first party, second party, third party all are involved in that. That means I'm insured. If something goes wrong with my car, I'm insured. The other person whose car getting affected by my car is also insured. So that is a comprehensive insurance where both party, first party and third party, both are insured by the second party, that is the insurance company. Then we have got also travel insurance. So the name itself explains. People are taking this travel insurance these days very regularly, where they would be actually whatever the flight gets cancelled, the ticket gets cancelled, or anything happening in the travel, the baggage gets lost. So there can be a baggage component. They're called riders, like additional things that you can add. Like in health insurance, there are lots of riders that they have got for this health or that health. So these are the things on which the travel-related activity is getting insured. It's called as travel insurance. But then there is something which is very special. If you have got shipment of goods is there, and then consignments or cargo is moving, and that gets insured, that's called as marine insurance. So all those cargo-related insurance that you have got, they go into the broad head of cargo insurance. And then there's also, they use a word these days as liability insurance. Whatever legal liability that may accrue because of anything going wrong is also getting insured, and that is called as liability insurance. Lots of activities these days, they essentially factor in the liability insurance so that the company is less affected by any unforeseen circumstances of legal liability happening to a particular thing, and that becomes a liability insurance. Another thing which is becoming very popular these days is cyber insurance. So because of the cyber crime and a lot of things happening there are a lot of insurance products that they have got in the market these days. They are covered under the broad head of cyber insurance. There's so many new things almost on a monthly basis is emerging in actuarial sector. Actuarial is the science of study of insurance, and then they're thinking about new ways to provide insurance. Like I was reading about parametric insurance. I mean, there is a very new concept of insurance where you would have parameters are being insured, and that I read, which was becoming popular during COVID time. If you have got the vaccines are being shipped, and then if there are certain parameters of humidity and temperature to be maintained for those specialized boxes and containers in which they are going, if the parameters change, that the vaccine gets wasted. So those parameters will be maintained or not, or is also getting insured, and they call it as parametric insurance. There's so many ways that this insurance sector has come up, and that is maturing with every passing day. And I thought it's a small collection of a few words which will explain to you the various terms which are associated and commonly used by the people you should be clear about in terms of those insurance sector. Well, I assume that you have various aspects that is appearing as part of the money and its role that you have studied, and I'm also assuming that you're not forgetting to put your score here. Of course, I have taken some terms here which is not there in the chapter, but then when you give the test, I would like you to not forget and come back and write your score. I keep reminding you, because when you go to these pages again, any chapter which has got lesser score, you can always know in time and get back to it and then have it revised. I'm sure this was a slightly lighter chapter that you have done so far, and the next chapter is also going to be a little lighter, and I'm going to get back to you again tomorrow night. So for now, good night.